All right, today we are jumping right into a really high-profile property in Kuala Lumpur. Residensi Solaris Parq. We're going to break down everything, the numbers, the lifestyle, the long-term gamble, to figure out if this is a golden opportunity or maybe a bit of a trap. Let's get into it.
So right off the bat, you see the core conflict here. On one hand, you've got this perfect pitch, right? A freehold property, prime location, and it's directly connected to the super popular Publica. But on the other hand, you have the cold, hard data, and it shows that early investors are actually seeing negative capital growth. So what is really going on? Okay, so first up, let's build the bull case. The developer has built this project on what they call defensible value propositions. So let's unpack exactly what makes this property look so good on paper. See, this isn't just another condo building. Nope, it's a whole master plan. The vision is for this completely integrated community where you can live in the residences, shop at the retail galleria, work in the office tower, and even relax in a huge 2-acre urban park. It's meant to be its own self-contained little world. And here's where the appeal really comes into focus. You've got the security of a freehold title in a top-tier area, plus it's right near major international schools. But the real killer feature? It's that direct covered link to Publica. That's an immediate, tangible lifestyle upgrade that you just can't ignore. And this really highlights who they're targeting. That Publica connection isn't just a nice-to-have. It's a total magnet for a very specific, very desirable tenant base. We're talking high-income professionals and expat families who absolutely value that kind of lifestyle and are willing to pay for it. So, with all of that going for it, this thing sounds like a sure thing, right? A total no-brainer. Well, this is where our story takes a pretty sharp turn. Let's pivot to the data and see what's happening in the real world right now. So, while the promise is really compelling, the current market numbers, well, they're painting a much more challenging picture for anyone who's looking for a quick return on their investment. And here it is, the big gut punch number, negative 5.75% capital depreciation. Let's be really clear about what that means. On average, owners who bought from the developer and are now trying to sell their units are actually taking a loss. That signals some serious price pressure in the market. Now, this median price of about 1,046 ringgit per square foot tells us a lot. It basically screams competition. The surrounding area of Dutamas and Mont Kiara is just flooded with properties, and all that supply puts a pretty tight lid on prices. And what about renting it out? Well, the estimated gross rental yields are, okay, they're sitting between 4.3 and 5%. But here's the reality check. For most investors, that's probably not going to be enough to cover the monthly loan payments plus maintenance fees. That means you're likely topping up with cash every single month. So what does this all add up to? It's pretty simple, actually. All that supply and all that price pressure have created a market where buyers and renters, well, they hold all the cards right now. It is a tough environment for sellers and landlords. But wait, that's just the picture today. The entire investment thesis for Solaris Parq really hinges on one massive future catalyst. We're talking about a long-term bet that could honestly change everything. Let's just map this out. The project finished up in 2022. Today, we're seeing that negative growth, and there's no public transport to speak of. But the big prize, the potential game changer, is the proposed MRT Line 3 station, just a 500-meter walk away. So this isn't a short-term flip. No way. This is a 7, maybe even 10-year gamble that infrastructure actually becomes a reality. But before we can reach a verdict, we have to talk about a daily contradiction that really impacts both the lifestyle and the long-term value. It's the incredible perks versus the crushing reality of just getting in and out of the area. And this just captures the paradox perfectly. On one side, you have this unbeatable lifestyle, that direct covered walkway to all the food and fun at Publica. But on the other side, unbeatable traffic. We're talking severe, perpetual, soul-crushing congestion. You can easily walk to get a coffee, but you're stuck in your car for almost everything else. Okay, so after weighing this incredible promise against the current, pretty harsh reality, what is the final verdict? And maybe more importantly, who is this investment actually suited for? Let's just summarize it all. The pros are powerful. You've got the freehold status, that killer Publica link, the integrated master plan, and of course, that future MRT catalyst. But the cons, man, they're just as critical. You're looking at current price drops, terrible traffic, no existing public transport, and intense market competition.
So the key takeaway here is that this property is definitely not for everyone. It's for a very specific profile, what we're calling the long-term speculator. This is an investor with deep pockets, a really high tolerance for risk, and the patience to hold for 7 to 10 years, betting that the developer's vision and the government's infrastructure plans will all come true.
And that leaves us with the final big question. We know the location is prime, and the promise of the future is bright. But considering the current market weakness, the traffic, and that long wait for the MRT, is that future promise really worth the price you have to pay today? That's something every potential investor has to decide for themselves.